This is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex trading videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry. We send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. So we're going to keep today's video market update kind of short today, but we had a good question that came from one of our customers that sent a support ticket in asking how to manage a trade. Now, we show you how to manage a trade, but this was a little bit different. Normally, like I'm going to give you an example here. Here's a currency pair we've been trading on and off for the last month or so, just kicking butt. And this is the euro pound. And you can see the euro pound has been running in two channels. It's a channel here that's like a little pennant, like a flag pattern here. It's been slowly working its way up. Okay, and we just bought right here at 83.30 a few days ago, and so we are long this pair, expecting it to break up into this range and make a nice profit. And we are also, you can see that there's been for a while here, there was a trend going, a channel going this way. Now we kind of broken out of that channel and work more into this channel. But when we trade these channels, we usually tell you, you're going to buy here, put a stop loss down here, and pull our profit target here. But what do we do? Because we've told you this before, that currency pairs trade in a range 80% of the time. You can see in this chart here of the euro pound that since October of 2011, and right now it is early March 2012, you can see this thing has been running in a range most of the time. It breaks into a new range, goes into a new range. So what happens when you find a trending market? Now let's look at a currency pair that we just been trading. And this is the Aussie US dollar. Now, as you can see, the Aussie dollar has been trending up for some time. So our strategy works best when we are trading these ranges, these channels. Okay, but what do we do when the market starts trending? Like this, or what we're expecting now, which is we're expecting the Aussie dollar to just drop down over the next 3 to 4 weeks. Hopefully it'll happen at that time, but it could happen, take a little longer than that. We're expecting this currency pair to go all the way down to 1.1000. So how do we manage trades? If we told you, in fact, in this currency pair, we actually closed out 2 trades today. We made 254 pips today, just on this Aussie dollar short. So let's take an example. If we told you to sell the Aussie dollar at 1.080, and we had a stop loss all the way up at 1.0932, which I think was pretty close to what we had. How do we manage that trade to potentially go all the way down to this 1.100 mark? Okay, right around this range here. Okay, let's color this green. I mean, his question was, do we basically go short at 1.0800 and let the thing drop 700 pips over the next month? And the answer is no. And here's why. Because this thing can drop all the way down to 1.020, and then in 3 weeks it flies all the way and starts trending back up again, and you're going to get stopped out, and you never took any of your pips. So the goal is, what we talk about always, is pigs get fed, hogs get slaughtered. We want to be a pig. So the goal is take some of your profits and run. So here's how we would handle trading a long-term trade. That we would be, instead of closing out your trade, like if you sold it, we may send you a trade signal that says, sell the Aussie US dollar at 1.800, which I think we actually sold at 1.0777. And I think we closed our profit target here. But the customer basically saying, listen, we just threw 100 pips away that he could have continued making. So here's how you handle this trade. We sell here the Aussie dollar at 1.800. Okay? Now when you hit your first profit target, let's say our profit target was 1.0650, which it was. That's the way we set the trade, is we actually showed to close the entire trade out in profit. Here's what you could have done. Right here, you could have closed 50% of your trade, okay, in profit, and moved your stop loss, which is 1.0932, up to break even or a few pips in. So here's what happens. You sell the Aussie dollar at 1.0800. It comes down to the 1.0650 mark, okay, which you closed half of your lots in profit, and now you move your stop loss, let's say 5 pips below 1.800. Worst case that happens, this currency pair turns around over the next few days, shoots back up, and you get stopped out at 1.0805, 1.0805, sorry about that, and you still made an extra 5 pips. So what we want to do is, once you were pretty heavy into the profit zone, you want to close out your pips, and you want to protect your downside. You don't want, once this thing has moved that far, 150 pips, it's time to move your stop loss to break even or slightly in the money. So worst case scenario, this trade goes against you and it bounces back up. You don't lose the trade. You actually make a few pips. So close 50% of your lots here. Move your stop loss to break even. Now you've got to start looking at your next profit target. So I would say somewhere in this range, right? 1.381. You may want to close. So when this currency pair comes down here, now you have 50% of your original lots left. What I would do then is close out 50 to 60 to maybe even 70% of those lots, and now you're going to move your stop loss somewhere around here, which is where your original profit target. So as you're dropping down, your old profit targets will become your new stop losses. And if you do that, you could literally ride a trade from 1.0800 down to, all the way down to this range on one single trade. You get 700 pips. But you're going to take profit in pieces, okay? You close out 50% of your profit once you hit a nice support line, okay? You make your previous profit target your new stop loss, and you can keep moving that trade out until you eventually get stopped out. Now, I hope this makes sense to you. If it doesn't, send us a ticket to support@tradeadvisorpro.com, and we'd be glad to make sure you understand the process. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.